In today's market update, we are going to check in with what looks a parabolic move in progress in a white hot segment of the stock market. What is a parabolic move? We're going to answer that. Also, SpaceX IPO has happened. They've been trading for a couple weeks now. We're going to check in and see how that's going. And then lastly, applications for new businesses just hit a new all-time high in the US. What's the biggest reason for that? We've got that covered and more. Let's dive into it. Well, before we get into our update, just to thank you, we have crossed over 5,000 subscriptions for the channel, and we appreciate you helping us get there. Our next goal is 10,000. We're on the way. Thanks again. So, the lead for today is we may have a parabolic move in progress in a key segment of the stock market, and we're talking about the semiconductor chip segment. And listen, what we're talking about here is AI needs a lot of the fast-moving chips from NVIDIA, but they also need chips from about everyone else. Because what we've found as AI has advanced is memory chips, which used to be very cyclical, are needed. It gives AI the ability to think. And so what we've seen over the last 6 to 9 months is these stocks have gone up in a way, and recently have gone parabolic. The way to think about parabolic is normally if you have a stock or part of the market that's steadily going up in kind of a stair step, that's really what you want to see. But sometimes it goes up and rocket ships its way higher. That's when it gets to be a bit of a concern. And we have some charts here to show some parabolic moves over the last 20 years. But let's start by looking at the semiconductor index. So this owns all the chip makers that you know of, NVIDIA and Intel, Broadcom, and a lot of other equipment makers also. This is a 14-month total return going back into the mid-90s. And you'll notice that the top stands out in two places. Back during the dot-com bubble, when that burst, this was up 234%. In that 14-month period. That's back when Intel was up at the very top, the largest company in the US, first or second, and they were leading the pack back then. Then you'll notice for the next 20-25 years that there were some periods that this went up 100% or so in this 14 months. But in the last period of time, 246% return. And one of the leaders is a company called Micron that is the leader in the memory chip industry. This is Micron's chart over the last 10 years. It was slow and steadily heading higher with some sell-offs in between. But notice, late in 2025, it went from about $100 to $400, an incredible move. Then in the last couple months has gone from $400 to $1,200. So this is almost a 12x return over the last 12 months. This is parabolic, and we get concerned when we see these kind of moves. So let's show you why. And we're going to start off looking at something completely different than stocks, and that is silver. This is a chart of silver for the last 10 years, and from mid-25 until early January this year, silver was going up consistently, and then in January went straight up, a rocket ship. In fact, we did a post you can see on our blog. It was a video on January 29th where we said this is a mania. We're very concerned with this parabolic move. And silver went down 40% in the next week. And as we film this on June 23rd, silver is now down 50% from where it was in late January. So you could see there a parabolic move up, and it has been a hard fall for people who put a lot of money into silver there at the top. Next up on parabolic moves, one of the definitions of it, and that is tech stocks in the late 90s. I started my career in 1998 at Merrill Lynch, so I saw this up close. But tech stocks were kind of slow and steady from the early 90s to about 1998, and then they went straight up in late 98 and early 2000 until they peaked, and then we saw a nearly 80% decline in the Nasdaq. And here's the thing that made this so painful. In 99 and early 2000, I was doing cold calls for Merrill Lynch, and when I was calling people, it didn't matter their age, and I was talking about dividend-paying stocks or blue chip. Nobody had interest in that. Everyone wanted tech, and in 1999, 2 out of every $3 that went into mutual funds went into tech funds. Those people had a tough lesson there with the Nasdaq dropping nearly 80% in the next couple years. Now, the last parabolic move is a different kind of asset class also. We're talking Bitcoin. And this was specifically in 2019-20, and then this thing peaked and went parabolic in 2021 twice. And you can see the chart there. Late 2000, early 2021, this thing went up, up, and away. It had a more than 50% decline later in 21, and then went right back to a new all-time high. At that time, we were getting calls after calls for people saying, hey, is Bitcoin a good buy? What about Ethereum? What about Dogecoin? I kid you not. It was any kind of crypto, and we did several blog posts saying this is a mania. And then lo and behold, from top to bottom, over the next year, year and a half, Bitcoin dropped almost 80%. All the other coins dropped much more than that. So listen, the point here is when you see a chart, you want something to go up, yes, but when you see those kind of parabolic moves, the rocket ships higher, that is cause for concern, because oftentimes on the other side, it is a bloodbath. Well, in the summer of 2026, any market update, we have to have a SpaceX update. That has been the hottest story. In our last video, it was right before the IPO, they started trading. We talked about how the hype and the excitement here for SpaceX was unparalleled. We had not seen anything this anticipated in our nearly 30 years in the industry. SpaceX came public and the IPO price was $135. Listen, there were 5 shares requested for every 1 share that was actually going to be traded. So no matter what platform you were on, it was very hard to get shares of SpaceX at the IPO price of $135. So when it went public the first day, it bounced around between 150 and 170, 175. Then over the next few days went up, as you can see there, to the peak, $225. We figured that there was going to be major demand for it. But look at what has happened over the last week, week and a half. This has steadily started to decline. And in fact, this morning on June 23rd, it hit $148, giving up almost all the gains that it accrued. That's an over 30% sell-off in just about a week, week and a half. Again, not a surprise, we talked about companies that came public with nosebleed valuations, which is what SpaceX did at $1.75 trillion, trading at 90 times last year's sales. Those companies often had sell-offs of more than 40% somewhere in that first year. This is 33% in the first couple weeks. So listen, this doesn't mean that SpaceX is not going to be a great stock to own over the next couple years, 5-10 years. It very well might. But we knew early on this was going to be very volatile and you had to be very careful. Now, the companion chart we want to go over because it's just so interesting to us. SpaceX is just the latest IPO that's come with a lot of fanfare. It's definitely the most fanfare, but there have been others also that came with a lot of anticipation. On this screen, you'll recognize a lot of these names: Facebook and Twitter, Shopify, MongoDB, Pinterest, Zoom, CrowdStrike, DoorDash, Airbnb, Roblox, Coinbase, Robinhood, Rivian, and more. What this chart is looking at is in the first year that these companies traded after coming public, and all of these happened in the last 10 to 15 years. In the column on the far right is the max drawdown in the first year, which is from top to bottom, how far did they fall? And this is crazy. Look at the massive sell-off that almost every one of these names had in that first year. On average, down at the bottom, you can see a 55% decline. So listen, you have to be very careful. Now, this is where you have to, a lot of these names took a bloodbath in that first year somewhere along the line, but some of these companies bounced back and they were some of the best stocks in the last 10, 15 years. Facebook is the best example of that. CrowdStrike's a great example of that. But there are some like Rivian and Affirm and Pinterest who have had a Snap, who have had a much harder time. Rivian hit almost $170 1 week in, and it's around $10 now. So you have to be very careful with these IPOs. That's the big takeaway here. Now, it's a lot more fun talking about SpaceX and parabolic moves than it is the Federal Reserve and interest rates, but it's important, and so we're covering it here today. Last week, Kevin Warsh, the new Fed chair who took over for Jerome Powell, had his first Fed meeting and press conference, and we learned some key things. Now, the key takeaway, or the most important headline, was that interest rates didn't change, which, listen, if you go back 6 months, 9 months, almost everyone thought the new Fed chair would be cutting interest rates. But the conflict in the Middle East meant that interest rates, longer-term rates, went higher and inflation went higher, commodity prices up. And so as a result of that, rates were not cut. In fact, you can see there they were kept flat. This is showing the effective rate. This is an overnight rate, 3.63%, which is a range of 3.5 and 3.75 is the range that they kept. Now, there were a couple interesting things that came from this meeting. The first is which historically there has been something called the Summary of Economic Projections, and we'll put that up. This is where each member of the Fed basically puts in their projection of what the economic growth rate's going to be, what inflation will be, where they see interest rates at the end of 2026, at the end of 2027, things of that nature. What was notable here was in March, that came in at 3.4% for the Fed's rate at the end of 2026, and that was going to be a cut at that time that would get them there. Now that was 3.8%. So not only no cut, that's pricing in a rate hike by the end of the year. But Kevin Warsh said in the press conference that he is reevaluating whether these projections are even helpful. He is putting together committees to take a look at how they measure inflation and whether or not they should be doing summary of economic projections, and 3 other committees also. And so it's probably good to kind of re-examining what are we doing. The other thing that he talked about is in the past, every member of the Fed was quickly, as soon as they could, out giving interviews and speeches about where they thought interest rates should be and what they thought about the economy. And Warsh is saying, that may be too much information. Less may be more. So they're going to take a look at everything, and we will see what comes out of these committees once we get moving on. Now, the next thing I want to talk about that kind of ties into this a little bit is oil prices. Why? Because oil going up to over $100 a barrel and staying between 90 and 100 for a lot of the last couple months while the conflict in the Middle East raged on is one of the big reasons why rates haven't been, or rates weren't cut. But take a look what has just happened in the last few days. Oil, after having a big move up, it was trading at around in the high 50s prior to the conflict, and then spent a couple months bouncing back and forth between about 85 and 110. But in the last couple days, oil has gone down a lot to $73 a barrel. the lowest level by far over the last 3 months. So this is the market saying that they believe that the conflict is almost over there, that the strait's going to be open and left open. We will see if that is actually what comes to fruition or if this is hopeful thinking, but that is interesting to see such a move lower in oil over the last couple days. Now, the last chart in this segment here, we're looking at the dollar. We talked about last year in 2025, everywhere you turned, outlets, financial media, we're talking about the dollar's in decline. It's going to keep going down. We also heard that foreign investors were fleeing U.S. assets, selling treasuries, and we talked about that in our last video, that foreign investors' holdings of U.S. treasuries are at an all-time high, over $9 trillion. So it was not the case that they were fleeing treasuries. Well, take a look at what the dollar has done. It has had a big move up since early May to 101, and this is measuring the dollar versus the euro is about 50%, and then we have the Japanese yen and a few other currencies make this up. But the dollar just hit a one-year high at 101. So this is lower than where the dollar was at 110, 115 about a year before. But what's notable here is this goes against what so many people said, that the dollar was just going to keep going down, keep going down. It's up at a one-year high. This is notable. One thing we have wanted to see over the last couple years is an increase in small business activity, and we have gotten our wish in applications for new businesses. What we are looking at is a 4-month moving average going back to about 2005 here. In light purple at the bottom, these are people who are likely to add employees when they go and they do their application. You can say that stayed very steady for about 15 years. And then when COVID hit, it went up and it stayed up over the last 5 years at a solid clip. So that's not changing that much. We'd like to see that move a little higher in the future. But in dark purple, we're talking here about new businesses where it's a solo entrepreneur that's not planning, at least at the start, of hiring new workers. And this has exploded higher when COVID hit, and then we've had another leg higher in the last year. Now, what's the reason for this? We have a chart that I think explains it well. And this is taking a look at the growth in business applications, new business on the left, and on the bottom there, as you go along, the rate of AI adoption. When someone is putting in their application and it asks, do you plan on using AI or having AI as part of your business? What we've found is on the far right, at that 40% rate of AI adoption, you go up. That is the biggest rate of change in applications. So let me simplify this for you. What is happening is individuals who are using AI are starting businesses at a lot faster clip than those who are not. And time will tell over the next couple of years how these businesses end up doing. But the early reports are that these people are getting to $100,000 in revenue and $1 million in revenue faster than people who started businesses 3, 4, 5 years ago. Very interesting. We'll be keeping a close eye on it. Our last segment here, we are taking a look at the U.S. consumer. It's very important for the health of the economy. The consumer has carried things a lot over the last 15 years. And we're looking in at a chart that takes a look at the individuals after-tax income. What percentage of that is going to pay debt, like a mortgage and car loan? And this looks back to 1980. You can see this peaked in the right before the financial crisis when, Americans binged on debt, and that did not end very well. And so the percentage peaked up close to 16% there, went down, bottomed early in COVID. A lot of people got their money from the government, paid down down debt, and other people still had jobs but weren't doing anything, so they paid down debt some more, and it's been kind of steadily moving higher since. But what I want to note here, it's at around 11.5% now, which is, outside of the last couple of years, is still the lowest percentage since 1980. So this means that the consumer still has room to take on some more debt and do things like buying a house or buying a car, etc. We like to see they still have some room there. That also allows them to go and spend money now. And the Red Book Index, we check in on this frequently. This is a near real time. We get this every week. Look at retail sales growth year over year. And the reason I'm showing this, it hit 10% last week, its best week of the year. And you can see for a long time, this was around 5.5, 6, which that's a really good number. 10% is an incredible number. Yes, gasoline and higher gasoline is a little bit of this, but more of it is just spending on everything else, which includes like Walmart and Costco and Amazon and those kind of expenditures. So we like to see consumers still outspending. 10% growth. You can't beat this. So the key takeaways are, do we have a parabolic move taking place in the semiconductor stocks? Well, there's a lot of similarities of the chart to what we've seen from past parabolic moves like silver, Bitcoin, and tech stocks. And then with the Fed, Kevin Warsh just wrapped his first meeting, keeping rates the same. What's going to be very interesting to see, what does his committees come back with as far as changes at the Fed as the year progresses. Listen, if you are new to Centera, you can go to our website. We focus on retirement planning and investing. And if you have an advisor who's not doing one very well or not doing but either one very well, reach out to us. You can talk to a person. We'd love to hear from you. Well, thanks for watching. Take care.